Hi everybody, it's me, Gregory Mannarino. How are you today? It is Monday, November 4th. Happy Monday, by the way. All right, everyone, let's talk here because this is getting kind of ridiculous. If you've been following the financial channels, even the mainstream media, when they start talking about the stock market, more and more nonsense chatter about a possible December taper. I want to go on record right here again stating there will be no December taper. As a matter of fact, there is going to be no taper, period. Sometime next year, it's going to be increased. I'm referring to quantitative easing for several reasons. Number one, the Fed will continue their asset buying purchases until this whole thing literally implodes on itself. They have to do it, and I've been over that fact many, many times. They are now the lender of last resort. This has been going on for quite a while. Also, number two, the Fed's target inflation rate of 2%, they're not even close to it. So that means more money printing. So I don't understand what is going on here with these financial channels and why they're talking about a December taper. It's not going to happen. There is no way, and they can't be that dumb. They have to realize this. So what does this all mean in the grand scheme of things? Okay, we saw today what happened to the U.S. dollar. The U.S. dollar did show some weakness, and I believe that's going to continue now unless some crazy thing goes on here with the European Central Bank over the next week. We understand they cut interest rates last week that put pressure on the euro. The dollar rose. I think the weakness in the dollar is going to continue again for the reasons that we just went over. Now, a couple of other things here that are going on here. From a technical standpoint, it's very hard for anyone to argue that the markets, I'm referring to the stock market, is over-owned and really the valuations are stretched. PE ratios are almost laughable, but this will continue. Why? Again, the $85 billion gorilla in the room, which is going to be who knows what next year, 100 billion, 125 billion, whatever it is. So again, what does this all mean in the grand scheme of things? I believe, again, when the market starts to digest this, we are going to see stocks hit all-time high after all-time high after all-time high through the end of the year. This is not going to be linear, people. It's not going to be like this. It's going to be like this, okay? I also believe we are going to see gold and silver rise dramatically through the end of the year. Again, I have no doubt that we are at a bottom. Now, understand, people, we're already starting to see this. The premiums for bullion are rising. So again, and this is a concept I've spoken about. I've written about in my book, The Politics of Money. There is going to be an absolute disconnect at one point between the paper fake market and the bullion market. And I'm telling you this, at one point, well, let's say this, those that have been manipulating the markets through the mechanism of paper are going to get caught with their pants down around their ankles when this stuff really hits the fan. And it's going to be a moment I'm going to laugh about. In fact, I'm going to laugh so hard, my pants might fall down to my ankles. It's going to be incredible, and that's a fact. So again, just to put a perspective on this, it's very simple to understand that there will be no taper whatsoever as far as the eye can see. And not only that, it's going to be increased. This is going to affect the markets dramatically throughout the end of the year, probably into early next year. Now, my only question is this, and I've been pondering this with friends of mine as well. When there is an announcement, and it's coming, that there will be an increase in quantitative easing, how will the markets react to it? I think there may be an initial knee-jerk rise, but when the reality sets in that there is a huge problem, again, the Fed is still in absolute panic mode, just as if the crash of 2008 happened today. They're going to keep on printing cash out of thin air, buying bonds, buying mortgage-backed securities, other assets as well. Gold. And there's no doubt about it. We understand that the world, central banks, governments of the world, the richest people in the world are hoarding these assets. And there is no disputing that. But the paper markets continue to be under pressure. So there you can see that there's an absolute disconnect here. And that's going to play out to a much greater degree as we move forward. But really, I am so curious to see what's going to happen when the Fed announces that they need to increase their QE to keep this propped up. I'm not convinced the market's going to react in a good way. Again, there may be an initial bounce, but I think it's going to inject fear into the markets at that point. But we're way away from that. That's sometime next year. But now, with the dynamics in play, with the weakening dollar, which I think is going to continue, and the continued inflow of capital by the Fed, the market's got nowhere to go but up from here. And commodities are going to probably consolidate for a little bit, and they are just going to go way up. Now, when the Fed does announce their increase in QE, could you imagine how that's going to affect the metals and commodities? Again, people, the Fed, without any doubt, has lost control across the spectrum. All they have done, if you're not paying attention here, is cause distortions in asset classes across the board. And that the day to pay the piper is not far off, and there's no doubt about that. There's going to be that snapback moment when the market decides fair market value. If you're new to this blog, the job of the equity markets, all of the markets, the bond markets, the currency markets, commodities, is to determine fair market value. That's it. With this $85 billion a month gorilla in the room, nothing is real. Nothing at all has any bearing on reality. And at one point, there's going to be no stopping this. That snapback moment, that snapback to reality, is going to be the game changer of them all. And we're all going to get to witness it. There's no doubt about it. Anyway, all right, everyone, I'm going to end this video now. I just wanted to go over this. I think it's really important to understand. If you're looking to get into this market now, without a doubt, there is cash to be made. I'm referring to the equity market stocks. With regard to the metals, take advantage of these prices, people. Beyond any doubt, that's what you need to be doing at this point, and I hope you have been doing that for quite a while. That's it. I will see all of you tomorrow. Have a great day.